We're very pleased to have Selig Sachs, co-chair of Global Practice Group, Foley Lardner, with us. Thank you so much for joining us.
Nice to be here with you.
Great to see you again.
Thank you.
Tell us a little bit about your company.
Well, our law firm is primarily based in the United States, but we have an active practice in Latin America and in Asia. I devote my time and effort to Asia, and actually last year spent over 100 days in China. But at the same time being in China, we would use that opportunity to visit with clients and relationships in Tokyo, in Vietnam, and elsewhere. But it's a very exciting region of the world to be involved in.
What are the opportunities in Asia?
Well, I think what we're finding is a broadening and deepening of opportunities. The panel we just came from right now was talking about emerging markets, and of course one always talks about China, but there was discussion I was happy to see about India, about Indonesia, of other countries in the region, as well as discussions about Africa and in Latin America as well. So there are some people who feel that China, from a valuation perspective, is fully or maybe overvalued. There's a lot of private equity raised domestically in China right now as well. And I think funds, private equity, others are looking for other opportunities to get involved in the urbanization phenomenon that's not only happening in China, but throughout Asia and in sectors of Africa as well. I mean, China last year created 13.4 million new urban jobs. By 2030, I believe the expectation is there'll be another 300 million Chinese who will migrate from the rural environment into the urban environment. It creates enormous opportunities as China is converting itself to a service economy. The service economy is a growing percentage of the economy of China, and that will continue. So whether it's advanced technologies, or it's TMT, or in healthcare related services, or in consumer products, more and more of the economy of China is going to be driven by domestic consumption. And that provides opportunities for systems and expertise from the United States and other countries to kind of tap into this extraordinary market.
How would you describe the Chinese investor?
My practice has been shifting somewhat also. Yes, I still represent companies who are finding their place in China, who are establishing either telemedicine or other opportunities in China. But increasingly, I'm involved in representing Chinese companies who are investing in the United States. China has $3.7 trillion in foreign reserves. Monetary restrictions have been relaxed so that, for example, insurance companies, private equity companies can now more freely invest a sizable portion of their assets outside of China itself. And I think China Inc. Sees the need to become global players in many different sectors. So I think earlier today on one of the M&A panels, there was one of the managing directors of Fosun, and that is probably the leading example of a company who is embracing that trend of the theme of the rising middle class in China, but they're making their investments strategically on a global basis. What does that mean? That, they bought the One Chase Manhattan Plaza, which they've now renamed 26 Liberty. They're participating with TPG at a 20% level in the acquisition of Cirque du Soleil. They're one of the principals that bought Club Med. They're invested in healthcare, in apparel. So you find more and more Chinese companies diversifying through real estate and other investments in the United States and elsewhere, in Australia, in England, elsewhere in Europe, but oftentimes with the theme of not only diversification of assets, but being able to introduce systems and procedures and technology back into China to adapt it for the markets there. And that's happening a lot in healthcare as well, because China is essentially reinventing or modernizing its healthcare delivery system, which means clinics, hospital, senior living, as well as wanting to match the advancements they've had in in internet technology, such as Alibaba or Renren or Tencent, with comparable capability in drug advancement and medical devices as well. So I think there's a real push to build that knowledge base and infrastructure and those relationships so that China can become even more an inventor of technology as opposed to just a producer of goods and services.
Let's talk about macro trends, if we could, for just a moment. What effects do situations like the increasing value of the dollar and the decline of the euro, how does that affect growth markets?
Well, I think in terms of it, clearly the dollar has appreciated so much relative to the euro in the past 6 months. You then also have to take into account the energy effect also in terms of the decline in energy costs, the huge decline. So you really have a shifting in global capability. The United States is becoming the Kearney survey just came out on FDI and foreign direct investment, and the U.S. is again rated for the third year in a row because of its as the best macroeconomic environment for investment, and 46% as of the survey I think that was published yesterday have even a stronger opinion of the U.S. economy today than they even did a year ago. So I think the trends on a global basis are really very attractive from the U.S. perspective, because we are now the dominant producer of petrocarbons in the world, and we have the logistics, the human capital, the education system, the technology, and in order to continue to support advancement. And I think a lot of countries are looking to our model not to export it whole cloth, but to adapt it for their countries and their development as well.
Selig, great insight as always. Wonderful to talk to you. Thanks for joining us today.
My pleasure. Thank you.